Hello traders, Gary Wagner here, just before 11 o'clock in Honolulu, 5 o'clock in New York on Tuesday, the 12th day of August, 2014, and this is the daily report for gold and silver. Mixed bag in the precious metals markets with gold trading higher, silver trading lower, but gold well off of the highs. Currently trading up about $1 on the day. We'll talk about the highs and resistance in just a second. 1309.50, 1308, trading in that area roughly. The low today, 1305 even. The high, 1318.60. Silver trading lower on the day and lower on the week. This is a weekly chart. You can see that it is currently trading down. It is off about 6 cents on the day. The low 1981, the high 2025. And to me, what's most important is the fact that it is trading below $20 at 1993. More on silver towards the end of the show. Can you say resistance? There is absolutely no doubt we've got some substantial resistance in the market. When we look at this particular market right now, this is a 360-minute chart, of course, meaning an intraday chart. The market hit this high at around 1318, 1317. And if we take a look at this chart, you can see that I do have this one retracement. This is the retracement that we used for our B wave right here, because what it is it is a retracement off of this move down, and this being the 50%, this being the 70% or 76% mark. And although I wouldn't look at this particular area or this fib retracement because it's created off of this last corrective wave down here to really be an important number, but lo and behold, it is. There's no doubt we have achieved this. It broke just above this, traded below on the final C wave. Of course, our C wave terminated at a 61% retracement. The 61% retracement, of course, was a retracement of the rally up, and that made some sense. But there's no doubt on the last two occasions that it has attempted to take this particular area out. It has been unsuccessful. Now, this market has got a couple of very, very important factors that we need to take into account, so to speak. The first is this is the summer, so you've got light volume and you've got some real potential hotspots, geopolitical hotspots that buy on rumor, sell on fact, so to speak, will really hold this market hostage. So what we tend to see is the market overreacting to certain things because of the lack of liquidity, the light volume, and the fact that there is a geopolitical turmoil. In this case, it was Ukraine again, really pushing the market up and then taking it back down. So the whole adage of buy on rumor, sell on fact seems to be prevalent in this market right now. On a technical basis, however, there's no doubt we have some real resistance in this area. Now, in terms of support, our low today about 1305. 1305 is the 38% retracement. And if we look at this particular chart here, we can see that it is absolutely a supportive factor right in throughout here. Throughout this area, not so much. It moves above it, it moves below it, but it's not genuinely any spot to take a hold of. But take a look at the most recent activity over the last couple of days, this being 8/6, August 6th right here, which was the last time we saw the market dip below there and not too much. And then, of course, 1300 is an area that the market really hasn't even ventured to. So one suggestion, we are currently long the market. We have a stop that is well below. It's actually below these lows here. You might want to trail that stop up to below 13. The next trade alert that I put out will suggest exactly that you go ahead and trail the stops up. That will probably come out either before I publish and release this show, push it live, so to speak, or just right after the fact. But that would be my suggestion at this point, because we have held we have seen the market hold 1305. It has held pretty aggressively and pretty substantially. So I would feel comfortable putting it below 1300 on a protective stop. So yet another way to look at our support and resistance and what we're witnessing in the market, I believe that we were still accurate in looking at this particular breakout that we had as the termination of our C wave, this being our wave 1. This all, of course, is a subcount of a third wave, an intermediate third. Then we got, of course, our A, B, C. I believe we terminated on these lows right here. This low being 1280. We talked about the fact yesterday that when we looked at the most recent lows, we have 1280, we have 1240, and then we have 1180 below that. And so we've had the succession of higher lows, and that to me is what bodes well for the bulls right now. Now, in terms of support, here's our 1305, and on a daily chart, you can see that the market has really maintained this level as a supportive area in the market. Of course, this is a 38% retracement, and it is a 38% retracement of this particular rally here. So traders, what about silver? As you know, when we initiated our long position in gold, we did not at the same time issue a buy signal in silver. I have noticed a extreme divergence between the way gold and silver have at points moved in tandem. They are acting with unique characteristics. I realize that we still had some downside pressure in silver. Silver really was trading at that 50% retracement point when gold hit 61, but it wasn't showing us any signs either through candlesticks or through the other techniques that we utilize to kind of hit a pivot point or a bottom. We did get this piercing line last week, but there was absolutely no follow through on the next couple of days, which negated that call to us. If you recall, when we got this, I said that if we did get a confirming candle on the following day, meaning a green candle with a higher high and a higher low, we would consider pulling the trigger, so to speak, and issuing a buy signal. We absolutely didn't get that. We have maintained really sideways over the last couple of trading days. We had one day, meaning yesterday, in which the market did move higher, but all in all, we really see it kind of trading sideways with any kind of tendency still to the downside. So we remain flat in silver. Our suggestion is to maintain our long gold position, maintain no position in silver in terms of any kinds of active trades. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow on Wednesday for another daily update and review. Bye-bye.